Good morning once again, everybody. Man, what a day. It's only 10 o'clock in the morning, and we've already had ourselves a day. We're going to talk about what happens when you go into the day with a plan and something happens and the plan just flips on its head and you have a whole different plan ahead of you, because that's what happened today, right? We all thought one thing and no one knew that we are going to get a Fed chair announcement, and that's exactly what happened this morning. And you saw a lot of reaction to that in the futures markets, especially because the news came pre-market. So the futures market ripped, and actually is ripping present tense, right, is ripping on this news. A lot of volatility in futures land. We're going to talk about what today's news of Joe Biden nominating Jerome Powell for another term as Fed chair, what that means for the markets going forward, what it means for the markets today, how you can trade it. We got a lot going on here. So everyone strap in. Time for futures trading with NinjaTrader. Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Jim, how you doing, sir?
Great, Spencer. How are you?
Doing great. Is my assessment of the day accurate? Did you wake up? Did you with one plan, and then you had to ball that plan up and throw it in the trash at 9 o'clock in the morning?
100%. I mean, I had to defog my glasses when I sat down and started looking at this chart.
Yeah.
I mean, it was crazy. We expected this announcement imminently, whatever that meant, but and I think it was really smart that they did it Monday morning. Gives, because it's a short week, right? Gives the market time to assimilate. But boy, what a surprise in the reaction to the market.
No kidding. Let's pull up some charts, Jim, and take a look, see at what actually is happening here this morning. Because I guess we should start with the S&P as usual. But the S&P 500 futures are just going blast off mode.
Blast off mode. I mean, we talked about targets. My target from last week, we talked about that 47.17 as a target. Target one. We just blasted through that one, and now we're shooting up to that 75, which is still on my radar screen, man. 47.75. I don't know about this week, but maybe the way things are going, who knows?
I mean, at the rate we're going this morning, 47.75 is like this. That's this afternoon.
Exactly. I mean, it's crazy. So, and my only note on the chart this morning was, hey, we've got basically pretty much the same cast of characters. We have, Powell for another 4 years, and then Brainerd now has been kind of, I guess, promoted would be the word, right, to vice chair.
Yeah. So I guess the question is Jim, is you're seeing the reaction in the market this morning, and it's not just in the S&P, by the way. It's also, you can look at the NQ, right, the Nasdaq. Even the Russell is trading higher, though not as much. But the question is, like, what does this mean? There are a lot of questions here, but I guess we'll start with this one. What does this mean for the stock market, for investors?
Well, I mean, for investors, I think it's a good thing for the stock market, right? I mean, especially people who have portfolios that are invested long term, right? And I think this is a really good thing, especially if it continues throughout this process of tapering's coming up, and there'll be interest rate hikes. There will be, but I think the market is assimilating all of this information now in a positive manner, because we kind of got a snapshot of what's going to happen next year, especially with tapering and with interest rates.
Well, elaborate on that. What do you mean? What do you mean by next year? I guess, like, what is the timeline now? Because
let me pull up. This is a great. The CME group has this thing called the CME Fed Watch tool, right? And what it does is it keeps track of the Fed funds futures over various months, and it develops probabilities, in their opinion anyway, probabilities through their algo of what chances of certain things happening with the Fed funds target rate, and they list each meeting. And this probability, and it changes all the time, but right now the probability that anything happens in December is 0, right? The Fed funds rates between 0 and 25 still is the target. And then in January, it's only 90. It's 95%. Song remains the same, right? And there's not a lot of chances. And then in March, which coincidentally would be the first actual meeting of the new Fed appointment cycle, right? Because Powell ends in end of January. They have to go through a reconfirmation process. So this March meeting will be the first one where it's Powell and Brainerd. And now we're at 3/4. We're only at 3/4 probability that nothing changes. But then in May, it's 50-50. I mean, May it's 51%. Fed fund target stays the same. Then 40%. There's an interest rate hike, and they even have an 8% the Fed funds probability shoots up to 50 to 75 basis points. So this is really a fascinating. If you just Google CME Group Fed funds tool, really great thing to watch.
So, what is the implication here? Like how do we play that?
Well, right now, I think when looking at this, the idea here is watch how this changes, right, as time goes forward. We had Clarita on Friday as an example, who is the vice chair now, suggesting tapering is going to happen a lot faster, and then maybe interest rates are going to be increased a lot quicker. So when you start getting these kind of comments, it could change some of these numbers. But right now, what I'm going to do every week is I'm going to open this up Sunday night, Monday morning, and I'm going to take a look. Are we still at 76% in March? Are we still at 51% in May? And then kind of make decisions on how the market might assimilate that information. Change is going to be the key, right? As this changes, the market will change.
So you're saying the greater the likelihood of an interest rate hike, the greater the likelihood of the market, of the broader indices maybe not going up with the same vigor that they have been.
Exactly. You said it way better than me. That's exactly right. If these numbers start to reduce, these in the 0 to 25, that's in a way that's not expected or surprising, then you're right. I think the equities slow their roll.
Interesting. Okay, so and of course the announcement today of Jerome Powell has a direct bearing on that. Let's just go through the different markets. So we looked at the S&P futures. I would love for you to kind of rip through the different markets here and show us how this announcement played out across the board in stocks, in commodities, heck, in crypto too, because this is a macro headline with very wide-reaching market implications.
Yeah. Okay. For sure. Let's start with the Nasdaq 100. And if you look at the upper right hand side here, this is a classic ascending triangle chart pattern, right? A lot of times these classic patterns don't work, but in this case it did. And sure enough, look at this the contemporary green candle we're at right now. I'll get my crosshairs up here. And we're just ripping. I mean, this is another stock index future, so it's not surprising it's following in step with the S&P, but it is super strong. We could take a look over at Treasury bonds. I'd expect, and I have been expecting, that the 30-year, the long end of the yield curve, prices are going to start to go down. And remember, prices and interest rates are inversely related for this long end of the market as well as the short end of the market, and we're seeing this kind of convergence into this crazy kind of these two different trend lines that are meeting in the middle here. So we'll see what happens there, but I do expect a breakout down eventually sooner than later. But anyway, we're kind of inside bar day today. Not overly powerful, but we're back to where we were on Thursday almost. Gold is the story of the day. Look at that candle. This rectangle I drew was supposed to be an area. It was supposed to be an area of support, and we just blew through it today. So this was the impact specifically of the news today. Risk off. People are feeling comfortable selling their gold. Nowhere near driving toward that magical 2,000 level anymore.
Yeah, wait, why is this? I guess is this just a classic relationship thing, right? Where the market is saying, what is the market? I'm not even quite sure what the market is saying. The market is saying what? higher interest rates is bad for
Yeah, I
gold?
think it's an uncertainty thing. I think
Okay.
I think that
Okay.
there's this when markets are uncertain, the idea that gold is kind of a hedge against losing wealth and other things are kicking in. And right now, if you're holding gold right now, you might be thinking, hey, maybe I should get back into the stock market.
Okay. Okay. Yeah. So gold is a play on uncertainty, and we just got one major unknown is now known. So I guess that's the play. That's what's happening here, right?
Absolutely. I mean, we still have to get through a confirmation, but that's very likely. And I think this we have 4 more years potentially of unknown,
Yeah,
right?
yeah. So okay, so major movements this morning in the broad index futures and gold. I was wondering to see how Bitcoin and cryptos would react, and I was kind of surprised. I didn't really. I mean, something happened at 8:30. I don't know what in Bitcoin land, but like, I didn't really see any notable. It's always a learning experience, right? Because Bitcoin is so new. Um, as an instrument, and I'm always just interested. I think no one is quite sure what to make of markets like crypto as it pertains to a headline like this. Would you agree?
Yeah, I would agree. I mean, my original opinion is recently as last week was it was going to also act as kind of a flight to, maybe not flight to quality, but a kind of a risk on, risk off destination. And so what I did, I kind of tweaked the charts a little bit, and I have the gold futures and line on close chart up here. I have the Bitcoin line on close chart. And I'm wondering if this is if it's not if it's an inverse relationship instead of a, yeah, these things are in sync. I don't know. We're going to keep our eyes on going forward here, but like you said, it's brand new. We're in brand new territory with Bitcoin.
Yeah. Are there other markets that have moved heavily off this? I mean, you think about oil, you think about treasuries.
Yeah, so I have the crude oil here,
Yeah.
and this is the crude oil is inversely related to the dollar, in addition to a supply and demand market, mostly supply market, I think. But that's my opinion on that part. But right now, we're just hugging along this little trend line. I'm in bear mode right now. We'll see if that continues going forward. It didn't move that much today. I mean, relatively small here, so it's probably not that concerned about Chairman Powell, probably more concerned
Okay.
about,
So not okay.
the U.S. dollar did rally this morning. I don't know what it's doing right now, but
Okay, so not really a play off of this headline, but I guess like the reason I asked was because again, like it's not every day you get a headline, a macro market headline like this that has the implications that this one does. You're right. We could potentially have had a new chair of the Federal Reserve, and now we're going to have more of the same. And it's gonna that's why it's going to dominate, the conversation. Frankly, like you said, Jim, probably for the rest of the week, right? Because it was a huge unknown, and now it's known.
yeah.
And I think we can't underestimate, right, the importance of a headline like this on markets, especially in futures markets, because again, the news came out pre-market, and that was where the reaction had transpired, right? So yeah, very interesting day. So I guess I'm wondering, Jim, 9 o'clock rolls around today. You see that headline, like what's going through your mind right there?
So right here, so all right, I'm gonna draw my crosshairs right at the 9 to 9:10 candle, right? This is when it happened. And you could see it's a relatively large size candle, right? It's very positive, but right off the bat I wasn't too excited, right? I was like, okay, this is a normal reaction. We'll get a little bit of lift here. Maybe we'll get to my 47.17 number, right? And then the next candle here slowed its roll, and then the next candle here is like, nah, buyers started coming back in, and then continuation candle, continuation candle, continuation candle, continuation candle. So at 47.17, I was, like high fiving myself. But then it kept going, and I'm like, oh my goodness, man, this is really happy news. And I know it's a holiday week and maybe smaller volume at the end of the day, but still, that's impressive.
Yeah. We didn't even really talk about the holiday week factor at all. Do you want to talk a little bit more? Like how will that? Because let's see, markets are closed on Thursday, half day Friday. Do you know, Jim, what what the futures market hours are?
Yeah, so I think you're right. Like Thursday, so it's weird the way the CME group does it, but
Yeah,
there is this like half day on Friday,
right. So
and
Thursday night futures are open, right?
yeah,
Yeah.
yeah, yeah,
So, so the Friday session will start Thursday at 8, right? It's 8 p.m. Eastern, I
well,
think.
it'll no, well, it'll start 6 o'clock Eastern,
Oh, right, 6. Sorry.
and
Okay.
then go all night and all
Right.
until I can't remember if it's 10:30 or 12:30 off the top of my head. But my advice has always been, that it's there's no institutional volume. It's really just kind of a sloppy session,
Okay.
and even some people forget it's an early close. I totally recommend staying away from it.
Gotcha.
I know all the brokers in the world are hating me right now, but I would I would stay away from it that on that holiday. And then Thursday's an off day. Enjoy the day off with your family.
Yeah, I always enjoy every year. I'll pop on Twitter, a Friday morning, Black Friday morning, and there's always some commentary about like which way the markets are going, and then I have to remind myself like, do I really care? Like, do I really care what the markets are doing today? So the people that are watching the markets on like January 2nd, it's like, do I really care? I don't know. I don't know.
Well, the one thing to keep in mind though is next Sunday night when the market opens up for the following week
Yeah,
in the futures, a lot of time, and don't forget, Thanksgiving is it's a US thing, right? We take it for granted that it's a holiday because we live here, but globally, it's not a holiday. So things are going to happen internationally Thursday through Sunday, and Sunday after a holiday, then that's when you see gaps and things moving again, right? So be on your toes Sunday night if you have a position, or if you want to put a position on.
Here's a question from Cyprian. This is a good question here because he's asking. I guess he or she's asking about the new 24/5 trading hours on the SPX and the VIX. That's a great question because this is going to begin on. Oh wait, yesterday. It began yesterday. It was November 21st. Starting yesterday, the CBOE is basically running 24/5 markets, 24/5 markets. And Cyprian's asking how that would affect the futures markets. Good question, Cyprian. I forgot all about that.
Yeah, I don't know. I mean, I think it's a good thing in general when you could participate 24 hours a day or 23 hours a day, like in the futures markets. I think that's a good thing. And I think I don't know what kind of impact it's going to have on the futures markets. I think that there's definitely a relationship between those CBOT markets and especially the stock index futures. I'm not sure which one drives the other, but they're
It's
measures of each other.
Yeah, it's probably like there will definitely be opportunities to arbitrage options against the futures overnight. But you would assume that the futures market would be the driver, right? Because that
Well, not only that, we want to see in the new overnight markets. You want to make sure that there's going to be volume in there, right? So the bid
yeah,
ask spread's
yeah,
tight, and you can get in and
true,
out nicely.
true. Okay, so Jim, we usually like to, if we can, try to set up a trade or two or three on this show. We haven't done that yet. Are there any trade setups that you can walk us through right now in the new market?
Yeah, I mean, right now, okay, so I'm just looking at the E-mini S&P right now,
Yep.
and you can see we're trading at the top of the day, right? There is no area, there's no established area of resistance yet. So a counter trend trade here to sell a contract, in my opinion, is dangerous. I wouldn't recommend it. So alternatively, a pullback would be something maybe you could think about once things start slowing up here a little bit. And when I say pullback, I'm going to use my volume profile and kind of look at these nodes between the volume. Here's node number 1, which is considered market weakness. Node number 2, more market weakness. And just looking at this setup, potentially, if you're patient, let me see if I have my make sure I have my chart trader on. Wait for these nodes to get filled and then potentially try to get long. So it would look the trade would look something like this. And right now, with this market just going, that's all you got to go on, really. You just got to wait for a pullback, try to be a little bit scientific on it. And this is kind of what I would consider at this point in time.
Okay, so we have a setup here in the S&P futures, long bias trade. We've had some success at getting some fills on the show, so we'll see if we get a dip here, and if one of your buy orders gets filled in the next.
Yeah. Now keep in mind too. I mean, with this particular setup here, it's 7 points away, which in an ordinary day might seem like a lot, but in a day like today, you know, this isn't.
Not a lot, yeah.
Right.
My initial reaction, my initial hunch was I thought that whatever the move was, we would be faded. We just from the moment stopped making a new high for the day just now. I mean, it's basically now we are again. So it's basically just like straight up the last hour.
Yeah, and it's really I can't caution enough against the counter trend trade here.
Yeah.
Especially given the holiday and maybe potentially for the market for this particular market to be thinner, especially tomorrow and Wednesday.
All right, Jim, do you want to run through your tip of the week here? Is it time for that?
Yeah, we could do it. We've touched on it already.
Let's go for it.
All right, and we've already pretty much touched on it as a course of today. But this is Thanksgiving week. You know, trading's likely to be thinner, but historically, based on what I know, historically, this week is bullet. Notwithstanding all the excitement that happened this morning, this market is usually bullish pre-Thanksgiving, right between now and Thursday. So that's something to think about. And then also, and it doesn't always work that way, right? We could definitely have, no matter what the historical trends have always been, pre-Thanksgiving, pre-Christmas, last week of the year, sometimes those things kind of do the opposite. But this is kind of a little factoid that I wanted to throw out. And then also Friday, remember we have this Black Friday thing, which seems to, I don't know about you, Spencer, but it seems to have happened like all of November was like pre Black Friday sales. Yeah. But I think it's going to be an interesting one. I think a lot of folks are going to stock up for Christmas presents. I think it's going to be very successful. But as we get those sales numbers out of there, it could also boost this whole, provide even more trade boost to the upside in the stock index futures. Again, I'm looking at my new T1 here at 47.75.
Okay. Yeah, and you're right about the Black Friday sales. Though I did see this morning that Target, good on them. Target is staying closed on Thanksgiving for the entire day. Good on them. Having worked Black Friday retail, it is not fun on Thanksgiving. So good on them. But yeah, it does seem like the entire month has been one long Black Friday sale, starting earlier and earlier. Maybe a lot of that was due to them wanting to get ahead of the potential supply chain crunches. I don't know, but we'll find out. I intend to go shopping on Friday myself, so
yeah,
I'll report back on how crazy it gets. But for the markets, bottom line is it will be Fridays typically one of, if not the slowest, quietest day of the year in stock market. So
yeah.
Just not a lot going on. All right, we got a few minutes left. I want to give our viewers the opportunity to ask questions. If you have a question for Jim, drop it in the chat. I'm more than happy to ask whatever question you have for Jim on any market. It could be, stocks. We set up a trade here in the S&P, but it could be crypto. It could be commodities. Whatever. Drop a question in there for Jim. This is a futures-based show. We don't talk enough about futures, really. If you have a question about how the market works, what even is a future, ask it. I don't know what you don't know, right? So ask away. Jim, I wanted to look at Ethereum here. I know we looked at Bitcoin for a second.
Yeah.
The Ethereum futures market is it's not, it's newer than the Bitcoin futures.
Yeah.
But frankly, for a lot of people, probably more exciting because it's lower price and therefore more affordable.
Yeah.
And I'm not quite sure how the volume stacks up. I would imagine they're pretty consistent, or maybe not. No, not now. Now that we have a Bitcoin futures ETF, But I'm just curious if you could walk us through a setup there.
Yeah, I don't. So Ethereum, I don't have loaded on my platform right now.
Okay, then never mind.
But I do want to. I want to show people the trading ladder here. I just switched it
Yeah.
over to the micro Bitcoin.
Okay.
So best practices: enter with limit orders and try to exit with limit orders on your profit targets because there's a big bid-ask spread still. My guess is Ethereum, which I haven't followed, but I will for the next our next episode, is going to have a similar kind of bid-ask profile right now, where it's a wide bid-ask spread, and that could add to the cost of your trade.
Okay. Limit orders for the win. James wants your overall opinion on oil going forward.
Well, I think crude oil is going to. I think crude oil is going to trickle downward. Let me just pull up my. We got to keep an eye out on our. Our EIA, Energy Information Administration reports every week, and what we're hearing with OPEC Plus and all that stuff. But I think there's a lot of pressure from the international community to kind of open up the floodgates a little bit to give some relief on some of these crude oil prices. Natural gas also has its problems. But I definitely, I think the trend is down, and I think it's going to continue to go down. I don't really have a target in mind for the rest of the calendar year, but I think the international pressures that politicians are placing on each other is going to actually yield some fruit here, and we should be below $70 at a certain point in the next few months.
Can you pull up the RTY for me? Because this is the one. I mean, it is trading up this morning. It's trading a higher 1% today, but
yeah,
I'll be damned. It just does not look good. Like especially like when you stack that thing up against the S&P and the Nasdaq, man, it's just not where the party is.
Yeah, well, don't forget these are small cap stocks, right?
Yeah.
And they're probably struggling more with supply chain than the large cap. They just don't have the market power to get primacy on deliveries and stuff like that.
Yeah.
So you could see this is a daily chart. Today we have some trade lifts still, but we do have some retracement since the highs on the 8th of November. So you're right, but again, and I think the smaller, but on the good news, about with the small caps is they're probably a little less sensitive to international pressures, although you wouldn't be able to see it from this chart. But yeah, I don't know, but yeah, it's looking weaker for sure.
You want to look at natty gas? I've been looking at natty gas today. How is
No.
I did see it trading down. That was a couple hours ago, so I haven't looked at it in a couple hours.
Up here,
but
let's load it up. Just give it a second here while I'm taxing my remote broadband here at the Charlotte studio. So there's nat gas right now, December contract. Trend's kind of down, but we're still at 477 and a half. I mean, it's still pretty high up there. So we'll see what happens here. But this is looking like there's a little bit of an area, just glancing at it, not knowing that much about until the next report comes out. I'm just going to go ahead and draw my rectangle here. Looks like, so far we're seeing support here in this area. We just can't close into my rectangle here since we tried the beginning of the month and we're still not quite there. We're touching up against it now. We'll see if we could break through here.
So what happens if we do break through?
Well, I think when we start getting lower closes, like what I did was I just aligned my rectangle, the top of my rectangle, with the lowest body of a candle, which is basically this one and the one we have right now. And what I'm saying is, buyers are stubborn here, right? Not letting us punch through. Once we start punching through, a couple things could be maybe the paradigm of the market's changed a little bit. Maybe the weather report's better. Maybe the supply situation's better. But we really want to see a lower close here, even south of my rectangle here, just like we saw in gold, for me to say, all right, now things are going to start relaxing, and we're in bear mode.
But you're not in bull mode either, right?
I'm not right. I mean, look, I'll just put my crosshairs to the high here, the recent highs, and in a small range, 5.17/8 and then 4.78. So it's relatively small range right here, kind of toggling, swinging up, swinging down, swinging up, swinging down, which is what the markets do.
Okay, and then we talked about gold already, beach bum trading, but to be clear, Jim was not particularly excited about gold.
Well, I mean, here's the thing. I mean, Spencer, I'm excited because you can go short in the futures markets whenever you want.
True. Okay, true. I should have clarified that. Yes.
Yeah. So, but from a bullish point of view, I mean, this is pretty. We'll see if this redness continues early into next week. So, when we meet again, we'll have some more information about it. But right now, it looks like this whole paradigm has shifted downward. This bubble up here is no more, where I'm circling my mouse around it.
Mhm.
And I wouldn't be surprised if we started to attack the bottom of my trend line here, and we broke through it, and it's looking negative to me right now.
All right, Jim. Tell the people how they can learn more from you, from NinjaTrader about the futures market. And
Yeah. So if
yeah.
if I don't know if you have the power to do this, Spencer, but that platform training page, ninjatrader.com/platform training
Yep.
has all of our events. Actually, I could probably do it too. I
I
think
got
that
it
would
up.
be
I got it up right here.
got it. Okay.
Yeah.
And on this particular page, we've got well, in addition to myself, there's other folks doing stuff as well with respect to everything NinjaTrader platform related. And actually, tomorrow, Wednesday, I'm doing a trading psychology event. It's going to be a lot of fun. I've never done it before. I've been reading all these books. I'm on my game. I'm ready to talk about trading psychology, which is probably the I don't know, top 2 or 3, maybe number 1 thing you need to master as your day trading.
Yeah, and just to be clear, I'm pulling it up on my screen right now. This is the link is up there, and the link is in chat, and this is what Jim was talking about. So looks like every Tuesday, actually most days, Monday, Tuesday, Wednesday, they got something. So this week may be wonky with the short week, but it looks like you have something on Wednesday at noon. So there you go. NinjaTrader, actually, it's www. That's important. You have to do the www.com, I think. And then it's case sensitive, right? The P and the T. That's important.
Yeah.
Yeah.
It's crazy. It's crazy. Yeah.
The P in platform and the T in training have to be capitalized. But there's the link. There's the page. Link is in chat. There you go. All right. Jim Cagnina is the man over at NinjaTrader. He is their senior education and training specialist for their platform. He joins us every single Monday to talk about the futures markets, what he sees. We definitely did not get a fill, Jim. I'm looking
No.
at the market, and we
I mean,
haven't. I mean, we did stop going up, but we definitely have not come down at all.
yeah.
So I guess good luck on that. And we are going to take the next week off. So Jim, I'll catch you in a couple weeks. In the meantime, have a happy Thanksgiving and good luck in these markets and keep us tuned to what's going on, because it never stops unless except for Thursday, which it does stop, but not even for the whole day.
So just so you know, Spencer, as an ex-Chicagoan and now a fan of the Panthers and Cam Newton, I'm going to be on your side Thanksgiving for Detroit over the Bears.
Yeah, I think everyone should be rooting for the Lions. They have the sympathy trade on, right? It's by the dip on the Lions season. Mark Palmer's asking for links. Mark, there's a bunch of resources in the description of this video that have information for you about the offerings, the fee structure, the education. There's like 5 links in there. So I would point you to that direction, Mark. But there's a bunch of resources there. So all right, Jim Cagnina, have a great rest of your day, sir. I hope you get a fill on that order out there on the S&P 500 futures, and have a great holiday. And we'll see you in a couple weeks. All right.
All right, Spencer, you have a good one. Thank you.
All right. Everyone, that'll be a wrap today for futures trading with NinjaTrader. If you haven't already, do me a solid and hit that like button. I really would appreciate that. It does help. It sounds dumb, but it does help. I ask it a lot. And hey, we put the show out there for free. We're doing this with NinjaTrader. And the likes help. It really does. So please remember, all the information from this show, from all of our shows, is meant to be used as informational purposes only, not for investing or trading advice. That's gonna be a wrap here. Our next show is going live in about 25 minutes or so. We're going to start early today on Benzing Live. We have a SPACs interview, so we're talking SPACs today. A lot of you have asked for more SPAC coverage, so we're talking SPACs today for like the first hour of Benzing Live, and we have a guest as well who you may have heard of if you're into SPACs, Niccolo De Masi. You may have heard of that name. Yeah. Anyway, so that'll be in about 25 minutes from now. I'll see you guys over there. In the meantime, everyone, stay green, stay filled, and catch you later.